Wealth is a Choice podcast. Boom.
Let's listen to it. Let's listen to it.
Thanks for joining us today, Michael.
It's a pleasure to be here.
I'm really excited. I was telling you in the hallway, student loans, I've been in the financial services industry for a long time. Mm-hmm. Seems like it's a long time. But student loans are something that is always complicated and challenging for me to understand. And sometimes when I have some clients that come in that have been carrying student loans for a long time, or parents that are carrying student loans for the kids, I'm at a loss as to what advice to give them. So last year we met with Robin Lott and we were talking about saving for college. Michigan's got some phenomenal 529
Yes, we
plans,
do. Yes, we do.
Not just for college, but higher education. I'm really trying to distinguish. Not everything is about college. There's other routes to take after high school, and there's resources available for you to pursue other routes besides college. So I still get in this trap of college, the word college, but I'm trying to get out of that. So anyways, we were learning a lot about the resources available to save preemptively for school. You're going to help me understand when you borrow for some of this higher education, what does that look like? Not only the process of borrowing, what you should look for, but hugely, how do you repay it?
Yes. That's an important detail.
Yeah, that's because it's going to happen, right?
Yes.
I think it's going to happen. I think it's part of the program.
It sure is.
So you've been doing this for a long time. I'd love it if you can give us a little bit of background for what got you into the space, and now you're with the Treasury. So
Sure. It happened very much by accident. I went to law school and I got my dream job of being a prosecutor. Okay. And as I was working as a prosecutor,
Where was that?
This was in Indianapolis.
Oh, wow.
And as I was working as a prosecutor, I, would look at my paycheck and then I would look at my student loan bills, and I got really nervous. Okay. And I realized I need to know a lot more about student loans if I'm going to continue in public service. Okay. And so I started doing all this research, and I ran into questions that my servicer couldn't answer, the Department of Education couldn't answer to my satisfaction. Okay. And for me personally, I was very much dependent on the Public Service Student Loan Forgiveness Program. Okay. And if I couldn't qualify for PSLF, being a prosecutor wasn't going to work for me. Okay. So I spent a lot of time on that. And
is the prosecutor, that's public service or not public?
Yes, I was a government employee, and so government employees are part of the group of people that qualify for PSLF. Okay. And at the time, my coworkers were coming to me with questions, and friends from law school were coming to questions. So I just put up a website. Okay. And this is what I've learned. Okay. And I threw it up there just in case anybody else had questions. Yeah. And people saw it, they responded to it, they had more questions, I did more research for people, and I put that up. Okay. And then this website grew, and before I knew it, I had just created this position as student loan expert that I didn't set out to do. It just kind of happened. And, I felt a need there, so I continued with that. And I've worked with a lot of individuals and families over the years. I've done a lot of policy analysis, and a little over a year ago, the opportunity with Michigan came up, and I've always been on the outside saying, hey, you guys should do it this way, or you should do that. And now's my chance to kind of put my money where my mouth is and hopefully make things better for the people of Michigan.
Do you have the ability to modify the way things work at the state level to improve things? Is that what you thought like it might be?
That's a great question. So I oversee the Student Loan Repayment Division. Okay. And I think anyone in government will tell you that they wish there was more they could do, but there is a lot they can do. Okay. And, my team and I focus on the things we can do and just do the best at that. Good.
Were you a prosecutor and ran this information, student loan repayment at the same time?
Briefly I did, and then I transitioned to doing website work full time, and I did that full time for just about a decade. Okay.
Isn't that interesting when you can find a topic that you're not even intending to create a business out of it, but because there's so much need for it that it just happens.
It's fascinating, and I'm not an outlier in that experience. I think a lot of people go to school for one thing, and then what they become as a professional is a totally different thing.
Yeah.
So when we talk about financial planning and borrowing for school and things like that, it's really important, in my opinion, to go into it with an open mind.
Okay.
To know that your path may change, and to make decisions that keep as many doors open as possible, because you don't know what the future holds.
Yeah. I got into financial planning because I had student loan debt and credit card debt. And I came from the UP, and I'd never seen a credit card before, honestly. I mean, I'm not that old. I'm 54, but up in the UP, I guess we used cash and a checkbook, you know. And I came down to school in 1990, and there was a credit card company, Discover, in the student lounge, and they gave me a $2,000 credit limit card right there. And then outside in the parking lot, Bauer was having a rollerblade sale, and I'm a big hockey player. I never seen a rollerblade that was first coming out, so that was my very first purchase, and I still have those rollerblades, by the way. But I maxed out. I don't think they work, but I think I had to put them in a frame and put them in the office because I maxed out my credit card. I had student loan debt. I'm doing everything wrong, and I see an advertisement as an intern at a financial planning firm. I'm like, yeah, I should go check that out because I don't know what the heck I'm doing, and maybe I'll learn a thing or two, and that's what got me into this pathway. So it's always weird how we get into what we get into. Certainly didn't intend on it.
Yeah, I these days I think it's pretty rare that somebody goes to school for one thing. They get a job with one employer, they work there 30, 40 years, and then they retire. Yeah. That just doesn't seem to happen anymore.
Yeah. Well, we need a little life exposure to see what's really interesting to us. And
we do.
And what we're good at.
Yeah.
Yeah. So, I want to first, right out of the gates, talk about what people can use student loans for. Because I was saying, when we first sat down, that I still use the word college, I think, way too often. And there's more than college when you get out of high school. So what do people borrow for? Is it almost entirely college, or do they also borrow for other things?
They can borrow for other things. Student loan debt does have specific requirements to it. Okay. But there are other loans that are technically personal loans, but still can be used for other post-high school educational costs. Primarily what we focus on here is the higher education student loan debt.
And is that community college part of that?
That's a great question.
Okay.
So it can be.
Okay.
Here in Michigan, not so much because we have the community college guarantee. Okay. So it's if you are somebody who is trying to save money and doesn't want to spend a lot of money, especially early on in school, take advantage of that community college guarantee and then, save the loans for if you do something more expensive later on.
What's the guarantee? So everybody knows.
So the way the community college guarantee works is it provides opportunities for all Michigan graduates to go to community college and essentially get the first 2 years of their education and an associate's degree without running into any student debt. It's a fantastic opportunity that does not exist in most states. Yeah. We're very lucky here.
Is it an income-based?
It is not.
So they just go to school?
They just go to school. Now, you need to work with the school to make sure that you qualify and that, all the paperwork is in order. Yep. But it's a fantastic opportunity.
Absolutely.
As we talk about ways in which to pay for school, let's say, you're targeting a 4-year engineering degree or something like that, this is a tool that can help you get there.
Okay. And then what about like a trade school? Is that something people borrow student loans for, or that doesn't fit in the box?
It can. The federal government recently expanded Pell Grants to a new program called Working Pell, and that will now cover a lot of those trade school expenses.
Okay.
So there are a lot of post-high school educational opportunities that you can get that end up costing little to nothing.
Okay.
And what's nice about those is then we don't have to talk about student loans.
Okay. So if somebody is graduating from high school and they're thinking I might go down the community college route or the trade school route or the college route, then is there like a resource that they go to that gives an idea how much each of these different routes cost if they need to look at borrowing as an option? So something that somebody does to start to figure this out?
Yeah, that's a great, and that's a very early on question.
Okay.
Before you even talk about borrowing, I think the first question is, what do you want to do?
Okay.
What do you hope to achieve? And, as a 17, 18-year-old, that's a big question. Like these are big life questions that we're putting on the shoulders of young people who haven't experienced life yet.
Okay.
So one of the things I like to recommend people to do is, if you're potentially interested in something, like let's say you really want to be in financial planning, talk to a financial planner, ask if you can shadow them for a while.
Okay.
Do some free work for them if you can, but learn about what opportunities are out there. And then once you have a better understanding of what you want to do, then go to the financial analysis and find the path there.
All right. That makes sense. So before we get into the nitty-gritty,
okay,
families and their discussion and expectations about what happens once you turn 18 or get out of high school, what have you seen in that? Communication, laying it out, how early people talk about this or don't talk about this, and does it turn into a big old mess?
It's never easy. But it's critical.
Okay.
I would say every situation is different. Every family's finances are different. Every student's goals are different. Every individual's opportunities, talents, and interests are different. So I'm very hesitant to paint with broad brushstrokes. In some circumstances, you see families that completely over-leverage themselves with debt to pay for the dream school because their child earned it.
Okay.
And that can be a mistake. On the other extreme, I've seen instances of students who had great scholarships at school and only needed to borrow a little bit to get a phenomenal education. And it was what they wanted, but they decided not to do it because they were afraid to graduate with $5,000 of student loan debt.
Okay.
I think that can be a mistake.
Yep.
So we see there's a wide spectrum of potential mistakes to make.
Okay.
And there's no right or wrong path. I think the important thing is to go down whatever path you choose with open eyes.
Okay. So how have you talked with parents and their students? I don't know, like, to what degree you got into the discussion with families, but have you seen families and what ages they start to have these discussions so that students become 16, 17, 18 years old, educated, aware, and in reality with what's available to them?
I would say overall, personal finance is something that we as a society could do better educating our young people on.
Okay.
And it's tricky because in a lot of cases, you're getting that education at home, and many parents are not equipped to provide that education because they're struggling with it themselves.
Right.
Here in Michigan, we do now have personal finance as a part of the required curriculum. So I think that's a huge step forward. But
it probably also even just helps. They're learning, they're hearing about something, so they might go back to their parents and say, what's going on here? What's going on there?
If nothing else, it provides a great platform to start having those conversations.
Okay.
As far as what age, I think parents are in a better position than I am to decide when their child is ready to have these discussions. You can start with younger people and budgeting your allowance. If you get ice cream today, you can't get ice cream tomorrow, and learning about consequences of spending money versus saving money and things like that. When it comes to paying for college, I think that's a discussion that happens or should happen at the very beginning of the college selection process.
Okay.
Because there are limitations, and if we look at the federal policy right now, parents are going to have tough conversations with their kids.
Okay.
And you don't want to be in a situation where you build up your child and then you say,
by the way,
yeah, we can't afford this school.
Right.
But by the same token, you also need to be willing to have that conversation. Ideally, you have it early on, but the last thing you want to do is be in a situation where you realize we can't afford this school when your child or you, the student, is 3 years into that education.
Right.
That's the worst time to learn that.
Yeah.
So the sooner you have that realization, the sooner you have that conversation, the better.
Okay. Yeah, it's a really good point. I wonder how many families get into the school even without really dialing it in. And then I don't know what they hope or think might happen, but the math is kind of the math, and you can see where it's going to go.
And where it gets really tricky is the sticker price of a school and what it costs to attend the school can be very different things.
Yeah.
I mean, you look at some Ivy League schools that have exorbitant tuition costs. They also do wonderful work with their need-based students, and what it may cost a family to attend that school could be less than even some state schools. But on the flip side, you have some private schools that are very expensive. The student decides this is their dream school, and it's significantly more expensive than a state school or a community college, than finishing elsewhere. So I think it's important to go into the college selection process with an understanding that you don't know how much the school will cost for you until you've applied, you've worked with the financial aid office, and you actually see that information in front of you. So it's tricky. You got to have the hard conversations, but you can't say, no, don't even bother with that, because that school might be a good
school.
Yes. You don't want to be dismissive, but you want to be conscious of limitations.
So you can kind of formulate a plan and like, hey, we've saved up some money. I'm just thinking as a parent, we saved up some money. We I don't know. We've got, I'm going to make something up. We got $20,000 a year for you, or $15,000 a year for you, and beyond that, you're probably going to have to borrow. Now let's go. And it's work through the details, but this broad strokes is kind of what we're looking at. And now let's go apply and then see where you want to go and see what we can work out.
Yes.
But at least having some framework that this is a kind of what we've got going on.
Yes. Yeah, I think that's a good idea.
But I understand what you're saying, that you don't really know how to get into the detail until you've actually applied and actually even find out what they're offering is going to be.
Correct. Yeah, because there are scholarships, there are grants, there are loans, and that can be a way of making a school that might seem unaffordable affordable. The important thing to do at the onset is just to prepare your child for the fact that there are financial limitations to this process.
Yep.
There are opportunities that some students may have that you may not have.
Right.
But there are lots of opportunities that you will have.
Yep.
And here's kind of our limitations as a family.
Okay. And
start from that standpoint, and then go from there.
Yeah, that's good advice. I've seen over the years, I love the 529 plan, and I have loved it for a long time. And so I'm always encouraging people to put money into that for post-high school education.
Yes.
But I've seen where parents, they don't say anything about college, and the kids are kind of assuming it's just going to get paid for when they get there. Very rarely I've seen kids under the assumption that they're going to have to borrow for the entire thing and then find out that's not true, that mom and dad have some money for me, and that's like a home run.
Yeah.
But usually it's kind of the other way around, and then can be very disappointing. I remember telling a child, you can't go to that event this one night, let alone telling somebody you can't go to that school that all your other friends are going to at the last second. You know what I mean? That's a pretty disappointing.
It is. It's terrible. And I've spoken with parents who felt like they had to do this, like they would be failing their kids.
Right.
And I've spoken with students who borrowed money from school and said, my parents didn't help me at all. They refused to. Yeah. There's, again, a wide spectrum here. Yep. But the important thing is just not to over leverage yourself and to not. The sooner you have that conversation, the better. And I know I've said that already, and I'll probably say it again, but it's so important, because the later you have it, the harder it is. And as devastating as it is to tell your child, we can't afford your dream school, it's even more devastating to realize, before you graduate, that we're out of money. We can't get any more help. You're on your own, and the student doesn't have any further resources, and then can't finish. And that to me is the biggest student loan nightmare, is lots of debt but no degree.
Do you know the dropout rate?
It really varies by school.
Okay.
So I don't know what the average dropout rate is across all 4 years or publics, but
I know I looked it up at the federal level where they were tracking it, and this was like, I don't know, probably like 6, maybe 8 years ago. Last I called the Department of Education, but it was high. There was only like a 60 to 70% graduation rate.
Yeah, that sounds about right.
It was shocking.
Well,
and I don't have my degree. I'm a dropout, I guess. And I went to school long enough to get a degree. I think. And so, that can be the worst case scenario. But you're 3 years in.
Yes.
You're 1 year away from getting it, and you've got 70% of the student loan debt and 0 degree.
And it's part of the challenge there is, even if we present these statistics to your average 17 or 18-year-old, no one thinks, well, I'm going to be in that 33% that doesn't graduate. You're 18, you think you're invincible. Of course I'm going to graduate. Like, this is important to me. My family's spending money on it. I'm going to graduate. And it doesn't work out for everybody.
Ryan, I feel like we were just having this conversation with somebody where most drivers assume they're above average. What was that? We were talking about that with somebody. Most drivers assume they're above average. Driver.
And I think most high school seniors assume their academic outcomes are going to be better than average.
Right.
And that's not always the case. And then you're left with that the truly horrific student loan situation where you have all this debt. And you don't have the earning power of the degree to repay it.
Yeah. So you brought up this point, too, where parents feel the obligation to pay for sometimes. So I've seen, and I'll just share this to talk to parents that might be listening to this as well, where I've seen parents have student loan debt for 20, 30 years in the hundreds of thousands of dollars.
Absolutely.
And it's not a fun family, there's you know what I mean? There's friction going on there.
Absolutely.
And it is so much better if you can cover all this. And this is why we're spending so much time on this topic. It is so much better if you can cover all this and come up with a good family game plan. To higher education.
Absolutely.
Early on. Because these things are big and they don't go away.
Like you, I've worked with families that were dealing with that tension. And interestingly, you almost take on the role of therapist to resolve this, because the parent had one set of expectations and the child had another. I mean, think about how many families you've spoken with where the parents borrowed the loans, assuming that their child, with their new degree and their higher earning power, would pay back the loans, where the child thought, well, they borrowed that money. They're the ones who are going to repay it.
Right,
And that's a conversation that you want to have before you borrow that first loan, as opposed to when the first bill comes.
Yeah. All right. Hopefully everybody gets the point. Talk early. Yeah.
It was the Ola Stevenson's seminal 1981 paper. The conclusion is we are all less risky and more skillful than our fellow drivers.
Okay.
That was the takeaway.
Oh yeah, there was a study done a long time ago. Then they repeated it more recently, right? Yeah. Yeah, it's a phenomenon.
Yeah,
it exists.
And we want people to be confident.
Yeah.
Because the majority, it will pay off for.
Right.
But we've also got to prepare for the possibility that maybe it won't. And that's a tricky high-wired act.
Yeah.
For parents.
Yeah. Managing expectations.
Yes.
The Lions are going to win the Super Bowl, but they might not. I don't know. One of these days. All right. Thank you for spending all the time on that. It's a very important topic. So I think we're going to spend a lot of time talking about student loan repayment, because I think that's a really complicated part for people.
Sure.
But I'd like to talk about some of the different stages of student loan thinking. So first of all, you're a student and a parent of a student getting into school. The first stage is, it sounds like, where do you want to go? We hopefully had some conversation about, this is the resources we got for you.
Yep.
This is how much we don't have if in case you got to borrow 10 grand a year, 20 grand a year, or whatever the number is. And then they apply at schools, and then they get accepted at schools, and then what?
So from a student loan perspective, the first thing is always the FAFSA.
Okay.
Start with that. Not only will it help you get your federal student loans, but it will also help you qualify for a lot of other need-based aid, institutional aid.
So explain what FAFSA is too.
The free application for federal student aid,
okay,
I believe, or the federal application for.
And do people fill that out when they're in high school, when they're applying for schools, or after they've applied for schools?
You fill it out every aid year. At the end of the year, it becomes available, and some years it's available sooner than others.
Okay.
So you need to stay on top of it, but the sooner you fill it out, the better, because many of those need-based aid resources do run out.
Okay.
But I think it's really important at this juncture to point out that this isn't just FAFSA, and it's not just aid from your school. There are lots of other sources of aid that you should be pursuing while in high school and still while you're in school.
Okay.
There are lots of scholarships, lots of grants, some that are for example, available here through the state of Michigan. If you reach out to MyLeap, they can help you find state-based grants and scholarships.
Okay.
There's institutional ones, which I mentioned, but there are also other ones that often go missed. See if your parent's employer has a scholarship available. See if, do you work at McDonald's? Does McDonald's have a scholarship available for you? Are there scholarships available in your community? There are resources that have long lists of available scholarships where you can search to see if you're eligible.
Any few of those that you see as reliable?
What I would say is this. Not a single one of them is completely definitive.
Okay.
And the student that spends more time and searches down more wells looking for money,
okay,
they're going to find more. So do not go to one scholarship search engine and say, well, I checked, I found all the scholarships I applied, I'm eligible for, I applied, I'm done. This is the more you can do, the more creative you get, the better off you're going to be, because there's scholarship funds that every year go unclaimed.
Yep.
And
I work with a few organizations, and you got to work really hard to find people to apply to these things sometimes.
Yeah, and meanwhile we have a college affordability crisis happening.
Isn't that wild?
Yeah, it's so this is the stage, where you're looking at schools, where you're trying to figure out how to pay for things. Mm-hmm. This is the stage where that really makes a difference, and that effort really does pay off.
Is there any I heard this a long time ago. I don't know if it's still valid or not, mm-hmm. but you shouldn't pay money to search for scholarships. That the money flows between, like, let's say, for example, scholarship website, you put in your info, try to find some scholarships, that the money is between the scholarship and that website, mm-hmm. And the scholarship is paying that company, that website, to help find them applicants. Or I haven't looked at any of these websites in a long time, but I remember back in the day, or there were also places that the student would pay money to be on these searches. And I was always told the free is better in this case, but I don't know if that's the case.
Yeah, I think free is definitely better.
Okay.
Like other things we've discussed, I'm always hesitant to paint with broad brush strokes. Yep. I think the really important thing is to be proactive with what you're doing.
Okay.
If you think I'm going to pay this scholarship service and that's going to save me some work and then I won't have to do this other stuff, mm-hmm. you're misleading yourself.
Right.
The really the more creative you get with who you reach out to, hey, do you have scholarships available in your community? That's going to be the most fruitful. Mm-hmm. And that's how you're going to identify the things that are going unutilized.
Yeah. This is, I think, probably like 20 years ago. It's mm-hmm. a long time. It might have been that long. I talked to somebody that had founded, I'm going to get it wrong if I say it, but it might have been scholarships.com, or it was mm-hmm. something like that, very straightforward website like that. And he was telling me that they have scholarships where, like, the child loved to skateboard, they passed away young, they loved to skateboard, mm-hmm. and this family gives away scholarships for people that like to skateboard. Mm-hmm. Like, there's so many
That's a great
different
example.
Variables out there.
Yes.
That you got to, like you say, there's a lot of wells. Like, you got to
yes.
look, you got to dig.
Yes.
It's not all academics.
Correct.
So if you're not the smartest one in the school or got the best grades, you might be smart. Maybe you didn't get the best grades, but don't think a scholarship won't be there for you. It very well could be.
Yeah, and really any sort of assumption, like assuming your family makes too much money to qualify for any aid,
okay,
or assuming that your grades aren't good enough, or whatever.
Okay.
Assumptions are expensive at this point.
Okay.
The worst they can say is, no, you don't qualify.
Okay.
And then you spend whatever amount of time you spend applying, and that's gone. But in the long run, that effort will pay off.
I think a student in high school could view it as, and probably you could keep doing it in college too, but I think a student in high school could view it as a part-time job.
Oh, absolutely.
And it could be an extremely high-paying job.
Absolutely.
Okay. So the FAFSA, they fill that out. They're looking for scholarships. They apply for their school. Mm-hmm. They find out what programs a school might make available to them. Mm-hmm. Like you said earlier, it could be a private school. It's really expensive, but then they've got a scholarship that cuts it in half. I mean, you never know until you get in there, start to have the conversations.
So what happens at that stage is the school provides an aid package.
Okay.
And there has been some discussion about making the aid packages uniform. Mm-hmm. Right now they're not. So you really have to look at it closely, and if you don't understand, ask questions.
Okay.
And in some cases, it will look like, for example, a Parent Plus loan is a part of the aid package. Well, that's money you're borrowing. That's money you have to repay. That's a lot different than an institutional grant or scholarship.
Okay.
So get the aid package, take a look at it, try to understand it. If you're struggling to understand it, VSAC, which is the state-based lender in Vermont, they have a forget what it's called, comparison tool where you can basically upload your aid offers for the various schools and then do a true apples to apples comparison to see how much each one really costs.
Okay.
So there are resources to help you compare.
Okay.
So I'd recommend doing that if the aid package isn't perfectly clear to you.
Okay.
And this is one of those times where sometimes it's embarrassing to ask questions because, is this a stupid question?
Yeah.
Are they going to think I'm dumb?
Right.
This is the time to ask dumb questions. This is the time to be willing to embarrass yourself because the alternative is much worse.
Yeah.
The last thing you want to do is discover, oh, no, that wasn't a grant.
Right.
Then it's a problem. Yeah. Ask the questions up front and the school financial aid offices are there to help you. They are there to answer these questions, and if they haven't answered your questions to your satisfaction, keep asking those questions until you feel comfortable that you get it.
One thing I like to do, I'm a kind of simple-minded guy, but one thing I like to do is when I'm talking about money, or if I were in that office, I would be, they would say, this is how it works. And I would say, so for example, if it was this much money and this much money and this much money, then I would be paying that much. But I have to put it on paper to really make sure that we were talking about the same thing.
Sure, yeah.
Because sometimes we're communicating, but we're missing, either they or I am missing something.
Yeah, and
just make it as defined, bring it in. This is what you're saying, right?
Yeah, and what I like about that is you've identified your learning style. This is how I'm going to understand that information, and that works for you. It may not work for everybody else, but recognize your learning style and what it is you need to grasp that information and ask for that.
Okay. So now you're the student. You've picked your school, you figured all the information out, and you're going to school, and you're borrowing some money.
I think we skipped a step.
Did we?
Yes. So we just jumped from looking for scholarships, grants, and aid, and then you've picked a school.
Okay.
The picking the school is where a lot of the uncomfortable conversations happen.
Okay.
But it's really, really important to get that right.
Okay.
Because not all schools are the same. We've seen a lot of discourse lately about how higher education might not be what it's cracked up to be, and then we've seen others that if you don't go to college, you're a failure.
Right.
And
I hate that one, by the way.
Me too. And it is so individual specific, that decision, that it's really important to make an informed decision for yourself.
Okay.
What's best for you? What meets your needs?
Okay.
And when it comes to picking a college, you do have that financial aid package, but that's the financial aid package for 1 year.
Okay.
And the way I advise families and anyone I talk to.
I didn't know that. I kind of thought they'd ramp it over the whole period. Interesting.
Well, it would be nice, but it's hard to know what resources are going to be available in 4 years.
Yes, I get it.
So it's 1 year. And a mistake that a lot of families fall into is like, well, we've got this money saved up. We can take out this loan and we can get tuition paid for.
Yep.
Okay, you've done 1 year, but you're not there as consumer. You need to think of yourself as a consumer of higher education.
Okay.
As a consumer, is this education a good investment? As a consumer, is this a good purchase? And as a consumer, what you are buying is the degree.
Okay.
1 year of college is not a good purchase.
Right.
1 year of college is not a good investment.
Right.
It might be fun. You might learn a lot. You might have some great experiences, but more times than not, you're not getting your money's worth.
Okay.
You get your money's worth once you get that degree. So when we're evaluating schools and when we're comparing, you have to think about what is the cost of the degree.
Okay.
And then you can pick a school.
Okay. Makes sense.
And there's a lot that goes into that.
Yeah.
Because take, for example, the Parent Plus rules. Let's say as a parent, you're comfortable borrowing a Parent Plus loan. We can borrow $20,000 a year. So year 1, borrow $20,000. Year 2, borrow $20,000. Year 3, borrow $20,000. But there's also a cumulative limit, and that's $65,000.
Okay.
So for year 4, the most you'd be allowed to borrow is $5,000 if you did 20 for the preceding 3 years.
Yep.
So you have to think about things like that. You also need to take into account that we call it a 4-year degree, but that's kind of a misleading term. In a lot of cases, I think it's the majority of cases, it takes more than 4 years to get that 4-year degree.
Okay.
So are you in a position to pay for 5 years of school? A lot of areas of study, for example, engineering, routinely takes 5 years to get that undergraduate degree.
Okay.
So you've got to think about all of those things when you're assessing whether or not this is a school you can afford and whether or not this is a good investment.
Okay. And then how many different student loan sources are people evaluating? You mentioned the Parent Plus.
Sure, Parent Plus is one. The way I would start with it is you have your federal loans that are available directly for the students. Now those do have lower limits, especially your first and second year. It goes up a little bit more for your third and fourth year. The limits are even higher for independent students. But that's
meaning what you cap out the amount you can borrow?
Exactly.
Okay.
But that's really the starting point. I would say begin with that because those federal loans have the most forgiving repayment terms.
Okay.
The thing I like about federal student loans for most families is you have options like income-driven repayment.
Okay.
And what that means is your monthly payment is based upon what you earn, not how much you borrowed. So it acts almost as an insurance policy in case you run into a situation where, you expected your degree to pay $80,000 a year and you're making $32,000 a year. And now how are you going to pay for these loans?
Okay.
Well, income-driven repayment, which is only available for certain federal student loans, is a way to protect yourself.
And does it change the interest rate, or would you be paying less and the interest could be accruing on top of that?
Interest would still be accruing, and it's entirely possible that your monthly payment is lower than the interest that accrues each month. So your bill could be going up, or your balance could be going up each month.
Yeah.
However, there are also paths to forgiveness with these loans. Public service loan forgiveness, which we mentioned earlier. There's also forgiveness that comes after you've made income-driven repayment for 20 to 30 years, depending on the plan you're on. So there are other avenues that protect students if they fall into the group that doesn't get the degree, or if they get the degree but it doesn't pay off in the job marketplace like they thought it would.
Okay. All right. So back to the student evaluating their options. The first one they would look at would be the federal loan.
Yes.
Because it could be the most flexible for them.
Yes.
Okay.
It absolutely will be, and it's the first of the student loans. Again, you want grants and scholarships first, but in the student loan world, it would be a federal loan.
Then what's next?
That's a great question. And I think it's important to kind of parse out Parent Plus loans from the rest of the federal student loans because under the new policy, Parent Plus loans no longer have that path to forgiveness that we just talked about.
Okay.
They don't qualify for public service loan forgiveness. There's not an income-driven repayment option available. So practically speaking, they function a lot like a private student loan.
Sounds like it.
And that's kind of your next resource is a private student loan. And within the private student loan world, there's kind of two groups. There's the nonprofits and then the for-profits.
Okay.
And it's hard as a consumer to identify which loan is going to be best, because if you're looking for a student loan, you'll see rates as low as 3.4%. You think, wow, that'd be great. I'll apply there. And then you get a rate of 11%.
Okay.
And I think a lot of people make the mistake of thinking, well, they advertise the best rates, and I qualified for this rate. This must be the best rate I can get for. And that's not always the case. A lot of the nonprofits have much tighter windows. And so they might advertise rates starting at 5%, but then cap rates at 6.5% or 7%, which is much better than that 11% loan that maybe a for-profit's offering you.
Okay.
So just like we shop for interest rates on a car loan or a mortgage, you do the same thing with your student loans. And I suggest you do it every year because it changes.
So you suggest doing it on a new loan, or you're talking about even legacy loans, you would look at it every year?
So what I'm talking about is, your freshman year of school.
Student new loan. Got
yeah.
it. Yep.
Let's say your sophomore year, you need $5,000 again.
So, right, because every year is a new year.
Yes.
Then start fresh.
Yes.
Federal. Your Parent Plus, not as much of an option?
No, Parent Plus is definitely an option.
So federal, Parent Plus, private, non-profit, and for-profit.
Yeah. It's one of those things where it's very family specific.
Okay.
In some cases, I would tell a family, like, yes, a Parent Plus is a great option. In others, I would say, don't do this. The tricky part with Parent Plus loans now is the underwriting for that looks a lot different than for other student loans. And that used to be okay because you had previously with Parent Plus loans the chance to get income-driven repayment or qualify for public service loan forgiveness. And that made it okay that they didn't do as strict in underwriting because no matter what your income level was, there was a path forward for you. Now, what they look at is your credit history, and as long as you don't have negative items on your credit history, they'll let you borrow that loan. Mm-hmm. What they don't do is look at whether or not you can afford that loan. Mm-hmm. And you might not be able to afford that loan. Like just like a mortgage company may offer you a home loan of whatever number, and you look at that mortgage payment and think, we can't afford that. That's too risky. Right. The same is true for student loans, and especially with Parent Plus loans, you need to watch for that. Yeah. But it is, of those loans, it's the easiest to get. Yeah, because it's being backed by more than just a student. Yeah. So there's a lot of shopping that goes into that. Some people raid their retirement accounts, which I think is a mistake. Mm-hmm. Some people use home equity loans, which can make sense, but that's a high risk choice because you can get a lower interest rate, but now you're risking your home if you can't make those payments. Yeah. So it's really tricky. And then with most private student loans, most students will need a cosigner. And you can cosign year 1, but are you going to still be able to cosign year 4? What if you have multiple kids? Yeah. There's a lot of... Do the nonprofits have co-signing too? Yes. Okay. Yes. So the only one that is it the only one that's just on the student solely is the federal? The only one that is... Well, I won't say the only one because federal is just on the student. There's no parent cosigner for your undergraduate Stafford loan or for your graduate loan. Okay. But with the nonprofits and the for-profits, there's usually a cosigner requirement, although a lot of nonprofits are kind of dipping their toe into no cosigner loans. Okay. That's kind of the next frontier for nonprofit lenders is can we do this and make it sustainable so that we can keep loaning to people, because it does, we don't want to be limiting who has access to higher education, but at the same time, those institutions have to be responsible custodians of their resources.
Yeah. But I could see where there'd be a lot of situations where maybe somebody doesn't have a parent or doesn't have a parent that's able or willing or even able. Like they might not have a great credit score or they might not have the resources to be a good cosigner.
Absolutely.
Make a difference.
Absolutely.
So if they do cosign, if there's a cosigner, ultimately they're just as responsible for the loan as the student is.
Absolutely. And if they can't repay that loan in full, then they shouldn't cosign for it.
Right.
And that's a tough conversation to have with your kid too.
Yeah.
Like,
you got multiple kids, you're going to, I mean, you could easily have 6 figures.
Easily.
Yeah.
Easily.
Yeah.
And to say, no, I won't co-sign that loan, it almost feels like you're the one denying the child. And it's not. It's the circumstances.
Right.
But that's why you need to have all those conversations when you're picking the school.
Well, that's interesting that these nonprofits would be trying to figure that out. Because you could see there'd be a whole lot of possibility that isn't being, they just don't have a resource.
There's a unmet need.
Yeah.
And they're trying to fill that need, and it's great, but they can't fill it entirely. So this is one of the things that if you and I sit down in 5 or 10 years, we'll have learned a lot more, because the major federal student loan policy overhaul just went into effect this month.
Okay.
So we've still got a lot to learn. We've still got a lot to see how it shakes out. But that's going to be one of the things that when you and I revisit this topic, we'll know a lot more about.
Okay. When they throw out a number of how much student loan debt is out there, do you know what that number is?
I want to say it's like 1.8 trillion.
It kind of sounds right in my head too. It's
a big enough number that it's really hard to wrap your head around it.
And when you talk about the portion that can be forgiven, that's just the federal part. What part of the 1.8 might be federal?
The majority of it is federal.
Oh, it is?
Yes. Now,
that's interesting. In my head, I would have thought it'd be the other way around.
No, federal is well over $1 trillion of it.
Okay.
But when we talk about might be forgiven, a lot of the majority of the federal debt won't be forgiven.
Okay.
And you need to have a plan to repay it. The way I like to look at forgiveness, outside of a couple limited things like public service loan forgiveness, but for the most part, that forgiveness possibility is, think of it as an insurance policy. When you borrow loans, you want, whether it's federal, nonprofit, or for-profit, you want to be in a position where you're going to be able to repay all of it in full. The trick, and this is a broad brush stroke from somebody who really doesn't like broad brush strokes. The trick I like to tell people is try and figure out how much your total debt is going to be to get that degree, and then what's your best guess on your starting salary. And if your total debt is greater than your starting salary, you're on thin ice. If your total debt is less than what you expect your starting salary to be, it's more likely to be a solid investment.
Okay.
And it's a simple rule of thumb, and there are certainly exceptions to that rule, but I think it's a good starting point. The other thing I like to tell people,
there's gonna be the delier or the truth sayer right there when you do that type of math.
Yeah. Let the numbers,
because they might be giving you an offer of a whole lot of debt to borrow.
Yes.
That you can just take.
Yeah. And, for families, that might be a good way of framing the conversation, is not to say, this is what we'll do, is to say, this is going to be our goal.
Yeah.
We want to make sure that whatever you borrow is less than what your starting salary is going to be.
This is a good experience for you for decades.
Yes.
Not just a 4-year good experience that now becomes your nightmare.
We don't want this to be a regret. And then you're not saying you can't go to this school, you have to go to that school or anything like that.
Yep.
You're saying these are the guardrails.
Yep.
To protect yourself, to protect the family.
Yep.
Figure out what the guardrails are, and then see which schools fit inside those parameters.
at least we're in an era where actually this conversation should be easier because everybody recognizes the difficulty that's been going on.
I won't say everybody, but it's much better understood.
Okay.
And I do think it's easier because better tools exist.
Okay.
Like one thing that didn't exist when you and I were going to school is the college scorecard, which is done by the Federal Department of Education. And what you can do is, like, let's say I'm thinking about going to Michigan State and I want to major in psychology.
Okay.
So you can go to Michigan State, you can pull up their psychology program, and you can see this is the average starting salary for graduates from that specific program. This is the average debt that people are taking to graduate from that specific program. And you can compare it to national averages on that program. So when you go to school, you have you have resources to information that will give you a much better idea of how much you're going to earn. The mistake is, well, I'll borrow whatever it takes, it'll pay off because I'm going to have this degree. Once upon a time, that was kind of accurate. Like when my dad was at college, any degree really paid itself off. Now we have to think of it as an investment. We have to look at ourselves as consumers, not just people seeking education. And we've got to do some math to figure out if it pays off. And in many cases it will, in some cases it won't, and that's for the student and the parent, the consumers, to figure out.
So each year, when you go through this process, you're in school, you're applying for loans, they say you qualify for X amount. Is it at that moment, let's say you qualify for 20 grand.
Okay.
At that moment, I'm going to borrow 20 grand, or at that moment I qualify for 20 grand. It's almost like a line of credit that you use up to that 20 grand over the course of the year.
So the way it typically works is on a semester basis. So the loans are issued on an annual basis. So for the typical student, you'll apply in the fall for your loans, and then that money will usually go directly to the school. It'll pay off your tuition and fees, and then the excess will result in a check cut to the student to pay for living expenses, books, things like that. And then the second
Trips,
check,
vacations,
conceivably,
bar tab.
That second
Watch
check,
out.
that is one of those things. In law school, we used to say, like, you can live like a lawyer while you're in school or after school, but not both.
Not both, yeah.
And the lesson there.
Remember that one. That's a good saying.
The lesson there is be careful with what you borrow.
I told my kids, college is a time to live poor, man.
Yeah.
Embrace it, I mean, I love people to eat healthy. I'm not advocating for a ramen noodle diet for, 7 days a week. But that's a time to be a little poor. Try to figure out how to live on less and find some good food for cheap and whatever.
Cram a bunch of people into an apartment.
Right.
Like, you don't need to live
you don't all get
luxuriously.
Your own room and
I think that's really, really appropriate advice. And it's hard. And you also have the thing of, do you focus entirely on your studies, or do you work a part-time job, and how do you balance that? And again, that's a very much an individual question. Some people need to be focused entirely on school, but for others, that work is great experience that maybe pays off after school, and it's a great way to keep their debt manageable. So there are a lot of tough conversations to have, and I would almost say if it seems easy, you might be overlooking something.
Yeah. We had, I lived in a house with a bunch of guys, and, all of our furniture came from wherever it came from.
Yep.
One guy, my buddy Steve, he brought a couch home one day, and he didn't tell us where he got it. He it seemed like a nice couch. And I'm like, wow, thanks, Steve. That's awesome, And then we kept hearing these crickets. We're trying to figure out, like, where is this cricket noise coming from? And I remember crawling around the floor trying to pinpoint the cricket noise. They're all coming from that couch. So we found out later he just picked it off the side of the road, which was fine. We cleaned the couch out, and it worked just fine. We had it for a long time. But
I had a futon like that.
Yeah.
It was somebody else's. I got it for free because they were giving it away, and then I used it for like 5 or 6 years, and then handed it off to somebody else. And
college is the time to be creative.
Yeah, your back can tolerate it when you're 19.
Honestly, I know that these schools are competing for students, and I know that's tough. Like in the state of Michigan, Michigan State, U of M, Michigan Tech, they can get as many students as they want. And then all these other schools are competing for who doesn't go to those. You know what I mean? Like, and I know to compete, you got to have a nice looking gym, or at least maybe they feel like they have to have a nice looking gym. And you got to have different food options in the dorms. And I get that. I do kind of get that. It's complicated.
It's really tricky because.
But when we were looking for schools with a kid, one of my sons, we went out east to look at some schools out of state. I swear to God, one of them was it was like a ski resort. This is not realistic, buddy. It was kind of disgusting to me, actually. He didn't end up going there. He didn't want to go there, but this isn't right.
Yeah. And there are a couple factors to that. Like, in some cases, you do have many families who money is not an issue, and they can afford to write whatever check to whatever school, and that's the end of it. And, that's great for them, but for most families, that's not realistic, and it's important to look at it from a realistic standpoint. The other perspective is that was kind of a student loans arms race where there, for a while, the seemingly unlimited student loans were available.
Okay.
And because of that, students could borrow as much as they wanted, especially for graduate school. Back when we had Graduate Plus loans, you could borrow as much as you needed to pay for school. And for the school, the incentive was to attract as many students because they could all pay for it because that money was available. That's not the case anymore, but that's I think kind of one of the things we still see is where schools are still racing to have the best facilities as opposed to being the most affordable.
Okay.
And that's another thing that I would expect in 5 to 10 years, that things look a little different.
I hope so.
Yeah.
All right. So I think we're through. Manage it tight every year. Get the degree, whatever you're going after.
Yes.
Get the degree. Don't get 80% of the way there.
Yeah, that's.
Get it done. Anything else for the in-school person that they should really be focused on?
The only other thing that comes to mind, and this isn't even a student loan thing, is start working for that first job. Get the experience, develop relationships with your professors, start networking. I've met some young people who still in high school and already have a better understanding of networking than I do at my current age. And I really encourage people to do that. It's not comfortable, but we are in a changing society. We both talked about how the jobs we're in now look nothing like what we expected when we were in school. And that's definitely going to be the case for the kids who are in school now. So start building that network, start, getting those resources in place, start building those skills, because that's really going to matter. That's how you're going to separate yourself from other people for competitive positions. And
we heard this recently too from John, right?
Joe.
Yeah, Joe. Yep. And some people, the idea of networking is uncomfortable.
Very.
And it sounds, it's a put off almost,
Yeah.
But bottom line is networking is just getting to know people. It can be that simple. Having fun, making relationships, getting to know people, and that's a beautiful, fun thing about leaving home and going off and meeting new people, whether they're students or professors or people in the community or whatever.
Yeah.
People coming over for career fairs or job interviews or whatever. Just get to know people. This world is so much more fun with people in it.
Yeah.
And so if networking is a turnoff for you with that name, then simplify it to just, the Don't live in your own little bubble. Let people see who you are and get out and have a nice time.
Introvert over here.
I am too. The word networking is very difficult for me.
I'm very uncomfortable asking people for help.
Yeah.
That is not my nature, but I love helping people.
Yep.
And I've found that if I remind myself that I like helping people, they might also like helping people.
Okay.
And to try and look at it from their perspective and do your outreach that way.
Okay.
But it's, for some people it comes easy, and for the rest of us, it's so frustrating to see the ease in which people just build lifelong friends with complete strangers.
Yeah.
And it's so frustrating to see that, and I get that.
Yep.
But it's a very, very important skill, and it may be natural for some people. For the rest of us, it's something we do need to learn.
Okay. All right, so we're through school.
Okay.
Now what? Oh, one other question about student loan repayment during school.
Sure.
Do you make payments during school? Does the interest accrue during school, or is it deferred until you graduate?
That is a fantastic question. So in almost all cases, interest accrues during school.
Okay.
You are typically not required to make payments, although some you do.
Okay.
So what that means is the $5,000 you borrow this year, when you begin repayment in 4 years, is going to be much more than $5,000.
Correct. Which should be part of the math.
Absolutely.
In the beginning.
It should be part of the math. One of the tricks I like to tell people is try to pay just the interest on your loans as you accrue them. And
I love that advice.
Your freshman year, this payment's affordable. I can manage that, no problem. Then year 2 and year 3, it's like, well, that check's getting bigger and bigger. And it's a monthly reminder of the consequences of borrowing.
Okay.
And it may not work in every circumstance. Your finances might be too tight that you can't pull something like that off. But I really like the idea of that constant reminder that this is coming.
All right, that's phenomenal advice. I was only looking at it from the math of it. We're getting out of school with the amount that you borrowed.
Yeah, that's a great perk to it. But
what you're talking about is it's getting you invested into the entire process, and that is a phenomenal point.
Yeah, and because a lot of people, they finish school, then they have that 6-month grace period where they don't have to make any payments, and they think all is well, and then that first student loan bill shows up, and up until that point, they had no idea what their debt burden actually looks like in reality. And this is a good way to stay aware of that.
Okay. I love it. So now you're graduated, hopefully you got your degree, and you have a 6-month window, it sounds like?
Typically.
And then you just start making a payment.
Yes and no.
Okay.
So
do they all amortize different? 10-year, 20-year? Or how does that work?
Great question. Let me take those one at a time.
Okay.
We'll do the amortized question first because that's the easy one.
Okay.
It depends on the loan contract.
Okay.
So if you have a loan with a nonprofit or a for-profit, how long you have to repay it is just a term of that deal. You might have a variable rate loan or a fixed rate loan. You might have 10 years, 20 years, 15. I've seen all of them, other increments. It's just, the loan is a contract, and you are contractually obligated to repay that loan in a fixed amount of time typically, and that's where you'll find that information. So you should know that up front when you sign for that loan.
Okay.
Now with the federal loans, and going back to the previous question, like that first bill is typically the 10-year standard repayment plan.
Okay.
And that's a very intimidating number, especially for the people who have higher debt levels. Like, if you're somebody who was still borrowing under the old Graduate Plus rules and you now have $200,000 of debt, you get that first bill. It's huge. You think, how on earth am I ever going to afford that?
There's a reason most people have a 30-year mortgage.
Yeah. And the mistake people make is, I can't do that.
Mm-hmm.
I don't want to think about it. I'm not going to answer calls from my servicer. I can't make that huge payment and put food in my belly. So I'm going to ignore it because there's literally nothing I can do.
Mm-hmm.
The sad part is that first bill with the federal loans is on the standard repayment plan.
Okay.
There are other repayment plans that are more affordable.
Okay.
And that student who, let's say you're still looking for a job, they could be on an income-based repayment plan and paying $0 or paying $50 per month. And that's a lot more manageable than the $2,000 bill you've been thinking I can't possibly pay every month.
Okay.
And that kind of takes me to my next bit of advice for people who are starting repayment is, just like college, we don't think of it year to year. We think of it as the certificate.
Mm-hmm.
In repayment, don't think about it month to month. Think about, how am I going to get on the other side of this debt? How am I going to pay this off? Because a common mistake is you get that first big bill, you pay that huge payment for 3 months, and then month 4, you've now exhausted your savings. You don't have any emergency funds. Now what are you going to do? It's much better when that first bill arrives, get signed up on an affordable repayment plan that you can stick with, then you don't have to go through your emergency savings. You know, think about it long term.
What do you think about making it, if you could, at least being cognitively aware of the interest amount, making at least an interest payment plus a little bit of principal?
Typically, that's not the best approach. And the reason I say that is the way lenders are looking at it is either you've made your payment or you haven't. And if you're not making your payment, that little bit you're doing might feel good to you. It might feel like you're doing something, but you're still running the risk of going delinquent. You're still running the risk of going into default.
I was wondering if like the income-based repayment is less than the interest.
I see. Yeah, that is a scenario, and that's where we start to get into more sophisticated repayment strategies.
Okay.
So if you're making income-based payments, and
let's say your interest is $500 and your interest base is $50 is all they're going to require.
Okay. So yeah, you've got $450 of interest that is potentially growing each year, depending on the plan you're on. It's not necessarily the best idea to make that extra payment because, again, I want people thinking not month to month, but how are they going to repay it in full?
Okay.
And for some people with federal student loans, the way to get on the other side of it is not repayment in full, it's to earn loan forgiveness. So if you're somebody who gets a job with the government or a nonprofit and you're working towards that 10-year public service loan forgiveness, extra payments don't get you any closer. It just means there's less debt that's forgiven at the end.
Okay.
What I would suggest somebody in that scenario do is set up a high interest savings account. And if you have extra money that you think, well, maybe I could be paying down my student loans, but I'm not sure if it's the right move, put it on that high yield savings account. And then you're at least mitigating the interest costs and you're giving yourself some flexibility.
Okay. So this is a person that has the job. Out of school, they've got the government job.
Yes.
And they know what the outcome's going to be if they keep that job.
Yes. And they may not keep that job. They may go into the private sector and then they have to repay the loan in full, and then you've got that money in that high yield savings account. You can throw it at the debt at that point.
Okay. So if your strategy is loan forgiveness, then I'm not sure how to say this the right way, but I get what you're saying, and I think it makes a ton of sense. If the strategy is loan forgiveness, then use that to your advantage to save additional money.
Yes, absolutely.
Otherwise, what's the advantage? Kind of. I mean, not that there is zero advantage, But let's say maybe you could have had a private sector job. Maybe it would have paid more. I don't know. You decided to not do that to get loan forgiveness. So your net plus, if you didn't have to make all the loan payment, would be to have more money. And then if it didn't work out for whatever reason, well, you have more money, and then that can help you get caught up.
Yeah, it's ultimately it's math.
Yeah.
You know, sometimes you might be eligible for loan forgiveness after making income-based payments for a number of decades.
Yep.
But had you paid it off as quickly as you could, you spend less in the long run.
Yeah.
So it's important to recognize that getting loan forgiveness is not necessarily the most efficient way.
Yeah.
But if you've identified that it is the most efficient way, paying extra just means less loan forgiveness. So you don't want to do that.
Right.
But
saving your money is the advantage.
Yes.
And if you don't do the advantage,
yes,
then you
exactly.
could find yourself in a problem.
The other thing I will say is hope is not a strategy.
Okay.
We do have loan forgiveness programs. It is a viable option to get out from under your student loan debt, but there are specific rules for each program, and you've got to understand the rules for the program that you're pursuing. You've got to do the math for your income and your future earnings and your loan balance to decide. Don't just think, well, my loans will get forgiven. There are so many people who just assume their loans will be forgiven, and that is a huge mistake.
Okay. They think someday this is such a big problem that the loan forgiveness will fall down to me as well, even though I don't have a public sector job. And
that is an attitude that some people have, and I think it's kind of dangerous.
Okay.
I mean, is it conceivable? Who knows? I mean, student loan policy is constantly changing. I do like the idea of being flexible, and you know, if you think forgiveness is a possibility, keep making minimum payments, keep saving that money, like actually use it for something productive. The other thing is, you know, we're just talking about student loans right now, but you can't look at student debt in a vacuum. You've got mortgages, you've got car payments, you've got credit card debt. So if you've got, you know, let's say your Discover card, you just finished college, you got to get that credit card paid off before you can really get serious about your student loans. So get the student loan payment as low as possible, because that student loan interest rate is, let's say, 6 to 8%. Your credit card is 23%. You know, think of it almost as like a triage situation.
Right.
That's the emergency to deal with. Get that knocked out, and then focus on your student loans. But it all connects.
Okay. So all along the way, it's been very diligent about knowing the math, having the conversations, you know, doing the math, running it annually, reworking it, being logical about the income that you're going to be receiving, the payment you can handle, being vested in it along the way, making interest payments through college so that you're in reality, you're not blinded by it, you're not like immune to the reality because you haven't really lived it at all. Yeah, and a lot of reality-seeking opportunities in here.
That's a great way of describing it. Like, it is work, but it's doable.
Yeah.
And it's manageable, and there are resources out there. It just requires proactivity all along the way, because the last thing you want to do is learn something the hard way.
Yeah.
And as long as you're being proactive at every step, you'll make better decisions, you'll save yourself a ton of money in the long run, and you'll avoid the nightmare scenarios.
Yeah. So I'd like to talk to you about people that have had debt for a long time, and I don't know if there's any magic bullet that they should be aware of they can do about it, but I've got a question first on student loan debt is different than other debt, and you're correct in that you don't bankrupt it. You can't. Like it's stickier than other debt. Is that right?
Yeah, stickier is a great way of describing it. It is different in bankruptcy. It's not impossible to discharge in a bankruptcy. And in fact, the federal standards for that, the way the Department of Justice handles those loans in a bankruptcy proceeding, changed over the last few years. So it's conceivable that it could be discharged in a bankruptcy. And if your finances are at the point where you need to pursue a bankruptcy, student loans potentially could get addressed, but you need to hire a specialized bankruptcy attorney who can handle student loan debt. It's a very specific practice, and it's kind of a new thing.
Okay.
But that possibility does exist.
Okay.
That said, it is a special process. It's not treated the same way a credit card or auto loan is treated in a bankruptcy. So there are some extra steps.
Okay. Does it die with you, or does it not go away?
Generally speaking, so with a federal loan, yes, it does.
Okay.
With many, nonprofit student loans and for-profit student loans, it does. Not always, though.
Okay.
If you look into it, you'll see some heartbreaking scenarios where, like, a parent co-signs a loan for their child. The child passes away at a young age. It's a devastating scenario, and then the lender says balance is due, and that can happen. So you really need to review the contract with the lender. Again, that's being proactive rather than finding out the hard way. And it's one of those scenarios nobody wants to think about.
Yep.
But it can happen with some student loans.
Yeah. I've talked to some people that have loans for their kids, and they're older now, and they're not paying the full interest, and they assume, and I don't know if this is accurate or not, they assume eventually when they pass away that loan will be gone, and their family won't have any obligation toward it.
I would say that is true in many circumstances, especially with federal loans. The word that makes me tingle a little bit and get nervous is when you say assume. That's something I would encourage people to verify.
Yeah.
Once you've verified it, then you can, do your financial planning, estate planning, or whatever around that fact. Yeah. Once you know it to be a fact, as opposed to an assumption.
And if it's not accurate, that's not the way it works. If you're in decent health, you can maybe get some life insurance to help, diminish the burden eventually, if that's,
Yeah, and that is a great way to insure against that risk. Yeah. Especially, like, let's say you've co-signed a loan for your child. Yeah. You reach out to the lender, hey, if my child becomes disabled or, they pass away, what's my obligation? If the lender says, well, you're going to have to repay that loan in full, then a life insurance policy for your child is probably not a bad idea. That's a great way of protecting yourself.
Yeah. Yep. All right. Cool. This is a lot of good, good reality checking stuff, but it's not being blind to it. It's not ignoring it. It's knowing your contract. It's addressing it, doing the math.
Yeah. All right. Proactivity.
Yeah. All right, so now let's talk about the situation where, and I don't know if you can talk about the new rules that came out, if they're that black and white that you've got some stuff to explain with them. But for people that have been out of school, they've gotten debt, maybe for a decade, maybe for more than a decade. What should they be looking at or thinking about?
So the repayment options have changed.
Okay.
Some of the repayment options they'll be grandfathered into, like the income-based repayment plan. Some of the repayment options are going away. Like, there are millions of borrowers right now who are on the SAVE plan, which is now eliminated.
What was that plan?
That was a plan created during the Biden administration that would have resulted in much lower payments for a lot of people. A lot of borrowers signed up for it. Then it got tied up in litigation, and now it's eliminated. And borrowers on that plan are now being told that as of July 1, they've got 90 days to find a new repayment plan. It's very dependent on what type of loan you have and the loan history. What I would tell people is recognize that things have changed, and in the interest of being proactive, talk to your loan servicer, do some research, figure out exactly what type of loan you have. Do you have a federal direct loan? Do you have a FELP loan? Do you have a Parent Plus loan? Because the repayment options are going to be different for each of those categories, and then figure out which path forward is best for you depending on which bucket you fall into.
Okay. If you call your lender and get information, are there sometimes a possibility that a loan can be consolidated, or you should call another lender that you don't even work with right now that could put you in a better situation?
That's a fantastic question. So there are two entirely different categories that get commingled all the time.
Okay.
You've got consolidation and refinance.
Okay.
Consolidation typically, not always, but typically is defined as a federal process. So you consolidate your federal loans from, whatever number of loans you have into one or two consolidated loans.
Okay, because as you were in school, you had a new loan every year.
Exactly.
Okay.
Exactly. And sometimes you have multiple loans.
Okay.
And by consolidating, you combine it into one loan. It doesn't lower your interest rate. What they do is they set the interest rate of the consolidated loan to the weighted average rounded to the nearest 1/8%.
Interesting.
So you're not saving money on interest by consolidating, but what you are doing is you're potentially gaining eligibility for other programs. For example, the FELP loans that I mentioned earlier, those can't qualify for public service loan forgiveness, but if you consolidate into a direct loan, it can. So the purpose behind a consolidation usually is to gain eligibility for a preferred federal program.
Okay.
Now, refinance is a totally different thing.
And it doesn't sound like, if you can consolidate, it doesn't sound like there's anything wrong with that.
Not necessarily.
Okay.
Consolidation should only be done if you're doing it for a specific advantage.
Okay.
Sometimes you can consolidate, and for example, like let's say you have 5 years towards public service loan forgiveness, and then you consolidate. Well, that's now a new loan, and you're starting back at day one. So I would urge caution with consolidation. Make sure that, again,
damn, that's why this is so complicated.
Yeah, make sure you're being proactive with it, doing your homework, because it can be great and it can be a mistake.
Do you think if somebody was considering consolidation and they called up, hey, I'm thinking about consolidating my loan, is there anything I'm missing that I might not want to do that? Do you think they'd get... Of course, you'd be speculating right now. I don't know. I just wonder, there's going to be some nuances. How would people not miss things sometimes?
There is a lot of nuance to that. And I would say the best advice is ask lots of people lots of questions.
Okay. Of course, we do have AI now.
We do, but that's tricky too, because the information that AI is being fed is sometimes out of date.
That's what I tell Ryan. I talk about all the time. I love AI. I've been saying it makes smart people smarter. If I don't know something about a subject and I go deep on AI, I could be really misled.
Yeah.
But when I have some expertise about a subject and I go in AI, I get really educated.
That's exactly it. When I'm using it for subjects in which I don't even know what I don't know, it's a great starting point.
Yeah.
But as a student loan expert, when I go into it and I ask questions just to evaluate its expertise, I see things that terrify me.
Yeah.
So, it can be a resource, but it is not definitive, and you need to, let's say you learned something there.
Yeah.
I don't put learn in quotes. Verify it externally.
It could really help a lot in your prep with a conversation with your lender.
Absolutely. Yeah. You can ask it what questions should I be asking, or how do I compare, or things like that.
What else might I need to be aware of if I did this?
What repayment options exist? And use that as a potential starting point for a discussion. I mean, you can even, like, as a parent, you could use it as, like, these are topics we should talk about.
Yeah.
When it comes to finance and paying for school. Like, it's great for kind of getting you started.
Yeah.
You know, if you've got a blank piece of paper, it's not blank anymore when you use the AI, but you can't rely on it.
Yeah. Okay. All right. So we were talking about consolidation, then refinance.
Yes. Okay.
Got it.
So refinance, completely different category.
Okay.
Refinance, you'll have some nonprofits that offer refinancing as well as some for-profits. And what they do is you'll send them your loan information, and they will pay off all of your loans, and the funds for that payoff will be from a brand new loan that you get with this new lender. And the purpose behind that is finding better terms. Okay. So, like, let's say you have loans that have 10 and 15 years, and you find a refinance company that will do it in 20, you can lower your payment. Ideally, you pick a refinance lender and you get a lower interest rate. Mm-hmm. So the terms get better. Mm-hmm. It doesn't work for everybody. There's underwriting that is required for it. But if you have existing student loans with no path to forgiveness, and it's just a matter of, I need to pay this off in full, mm-hmm. a refinance can help you get there quicker. Do the rates kind of follow, like, to me, everything's tied to the 10-year bond. Yeah. Like, if the 10-year bond goes down, mortgage rates are going down. Does it follow a pattern? Like, if rates are going down, you might look at refinancing. Rates going up, just wait a while. Yes and no. Okay. You see some differences across the refinance lenders. Like, the nonprofits will often set their rate, and that'll be the refinance rate for a year. Okay. Whereas the fintech companies that are in the space will be far more rate sensitive, and as rates are going up, their rates will go up immediately. Okay. So it really is in the best interest of the borrower to shop around to find the best rates that they qualify for. And again, because the lowest advertised rate is not the rate you'll qualify for. And one of the things that a lot of people worry, like, well, if I keep checking my rate, it's going to hurt my credit score. Okay. You're allowed to shop for rates. And I think it's within 60 days. You can play it safe and call it 30 days. Do all your rate shopping in a short period of time. Check your rates with a bunch of different lenders, and then go with the one that offers the best terms. And if nobody offers improved terms on what you already have, then don't refinance. Yeah. And then that base, and mm-hmm. Where I would look at the 10-year bond, have some awareness. Sure. And with the 10-year bond at this rate, and this is what I just researched, and this is what I could find, and then just, if it didn't work, just be aware of watching for an environment where rates might get lower, and then revisit the process. Yeah, and to your point earlier, like, they're all connected. Mm-hmm. So if you read headlines about mortgage rates being at the lowest level since 2020 or something like that, it's probably a good time to revisit your student loans and see if you can get lower interest rates on some of those. Okay. By the way, I love all these pictures. That's my team. Is it? Yeah. Okay. Yeah. Did they all self-portrait, or you guys paint each other? Painted each other. Did you really? Yeah. That was a team builder. That's a cool idea. Yeah. Some of us are better artists than others, but it was a fun exercise. It's very cool. How long did it take? An hour. That's so neat. Yeah. Did you look at each other and paint somebody? I wasn't here for it. Oh, no. This was a surprise they had waiting for me when I got back. I was out of town at the time. I wonder, did you know what they did? Did they look at a painting of each other? Or everyone was in the same room. Everyone got a canvas. Everyone got paint. And they just looked at each other and made art. That is so neat. And we're a bunch of student loan nerds, not, artists. Yeah. But that is very cool. I've been thinking about, we've got a lot of different friend groups, mm-hmm. and going to the paint store. I'm going to do that. I've got to do it this year, especially after seeing this. Yeah. But I'm going to get a big canvas and have one of our friend groups over for a party and have all the paint out
and just see what everybody puts on the canvas. You know what I mean? See, it might be, it's going to look cool.
Yeah.
No matter if it looks beautiful or not, it's going to look pretty cool. And I think it'd be kind of fun to see the different friend groups, like what kind of creativity comes out of them.
And it's a good exercise. Like, so much of, our day-to-day life is math. It's rules. And being creative is so important. And, this is just little things like that to flex that muscle is, I think, really good.
I hadn't thought about having everybody paint each other, but having everybody do a portrait of somebody would be hysterical. I think that'd be really cool.
Yeah, I'm told there was a lot of laughter when this happened.
That is so cool. Well, I'm glad I asked about that. That's pretty neat. All right, so the person that's got student loans for a long time, your options: consolidate. Make sure you understand the forgiveness that's available at the time. You were saying before, things can change. But at least be aware of how the law works.
Yeah, and one of the things I sometimes tell people is like revisit it yearly.
Okay. And where do you revisit it at?
Just do your research on a yearly basis. Maybe call your servicer. Maybe do it when you do taxes. Just like bite the bullet and do all the painful finance stuff at once. But see if there have been any rule changes. If you're applying for public service loan forgiveness, submit that employer certification every single year, because that's how you're going to verify that you're eligible.
Okay.
The steps to verify that you're eligible, to verify that you're on track. Don't just do it once and assume everything is going to be fine.
Okay.
Keep verifying.
And if you've not done that yet, this would be a new experience for you. But once you get in the routine of doing it once a year, it'll become a routine.
Yeah.
You'll get better and better and better at it.
And you get a feel for trusted resources.
Yeah.
You get a feel for, the programs you're working towards and the resources you have. You know what to ask. And it gets easier.
Okay. The opposite of trying to hide from my student loan debt.
Yes.
You really keep talking about embracing and getting to know it, which is the right way to go. And a lot of people are like, this damn thing, I want to get away from it.
It's scary.
Yeah.
But even the people who are in, let's say, that worst case scenario, nightmare situation where they just don't have the resources, they can't make the payment, there's nothing they can do, they're going to go delinquent and eventually fall into default. Even in the really, really hard situations, it's better knowing than the fear of the unknown. Because there's something about human nature where the unknown is almost always worse than the known bad. And so just, rip that Band-Aid off, figure out what your situation is, and odds are very, very good that it's better than the unknown that you've been dreading.
Yeah, we do play this worst case scenario in our heads.
Yeah. Yeah.
And we don't let it out of our heads either.
Yeah. And then it becomes a self-fulfilling prophecy.
There. Yeah.
Because we ignore things and they get worse.
Yeah. Yeah. What about the parents now? Is there anything different from the student that's had debt for 10, 15 years, whatever? Is there anything different on the parent that has a debt or co-signed for debt and is become the responsible payer on that debt? Is there anything different that they do that you haven't mentioned yet?
I mean, generally speaking, the same best practices still apply. Figure out what your path is to get out from behind this debt. Revisit it each year, have a plan, understand the rules. That's still the case. The only other thing I would add is when we're talking about parents, that's typically debt that was borrowed for a child, and now it's kind of more a team thing. Some parents choose to be solely responsible and they don't want their kids involved at all. In other families, they want the kids to pay as much as they possibly can. There's lots of, that's a wide spectrum.
And sometimes I think it goes back to that communication on the front end. Was it clear? Yeah. Whose going to pick up this obligation.
Yeah, and keep having that conversation. Like maybe the loan being in mom and dad's name is preferable because it'll help the child qualify for a home loan. And then at a certain point, maybe it's better for the debt to be in the child's name. And
that can get moved around?
It can if you refinance. So it is an option. It's by no means an easy thing, but you've got to, that family discussion involves what are the financial goals for the coming years and, you know, what are the landmines we need to avoid. And again, it's keeping everybody on the same page. Okay. Because those relationships matter. Okay. And if you're not having those discussions, you're endangering those relationships, no matter how great that relationship is. Okay.
Do you think we covered all the ranges?
All the ranges.
Ages, different, where you're at in life in terms of don't have any debt yet, you're in the school.
Yeah. The only other thing I would say is you did mention parent loans. It's good for the kids to help with that, especially if you have a parent who has little or no understanding of federal student loans and they have, let's say, a Parent Plus loan. As a child, even if you're not the one who's legally responsible for it, even if your parent has said, we'll take care of it, you can still help them. You can still help them understand the rules. You can still help them navigate a difficult scenario. And when you work as a team, it will go better for all people involved.
Okay. I would like to, you've hit a lot of really hot advice, and what I was going to ask you toward the end is, under each of these scenarios, the pre-higher education, the person in college, the person that just got out of college is going to start making payments, the person that's been making payments for a decade maybe, and the parents that might be obligated to the debt. I was going to ask you, and at each of these ones, and I'll start with the ones that isn't in school yet, what comes to mind is like one big top of advice for that scenario? Just one big top of advice.
The big piece of advice for somebody who isn't in school
You're
yet.
in high school.
Think of college as an investment and make sure you're making a good investment.
All right. Now the person in school.
Your finances are going to change. Make smart decisions while you're in school so you don't have to live with the consequences for the rest of your life.
All right. And I love the thing about making the interest payment because it gets you invested in it.
Yeah.
That's huge.
Yeah.
Okay, the person that just got out of school, now they're hopefully got a job.
Don't panic.
Okay.
My advice to that group is don't panic. It can be scary. You know, we're in a very uncertain job market. There are a lot of young people who are still looking for jobs, and that first student loan bill is normally huge. Okay. And that balance was insignificant up until you finish school, and then suddenly it's this huge number.
Yep.
Don't panic, and don't ignore it.
So that first bill is the starting point.
Yes.
And now figure out what your path is.
There are so many different permutations and paths that you can take. Don't panic.
Okay. Now the person that's been paying for 10 or 15 years.
That one's hard to say because for some people it's keep up the good work. For others, it's you got to get on this.
Yeah. If you haven't gotten into a routine, just like your taxes, like you said, of
find
monitoring,
find a healthy routine.
To get into a routine.
That's a good way of find a healthy routine.
Now, the parent that maybe has taken on the obligation. This is where I've seen the biggest number in terms of the mass amount of the debt.
Yeah,
$200,000, $300,000. I've seen $400,000.
That one's tricky because Parent Plus loans used to work really nice with Social Security. And I worked with a lot of parents who qualified for $0 per month payments because they were living on Social Security. So student loans did not have to wreck their retirement.
Yeah.
And there are still many scenarios where student loans don't have to impact your retirement. Weirdly, it almost starts to look like somebody who's just starting repayment. Like just starting repayment and on the precipice of retirement look a lot alike because your financial circumstances are going to change. What worked previously might not work moving forward. And, it's time to revisit everything again. It's time to look at your options and to get a better understanding of the rules.
Yeah. Could Social Security be garnished?
Technically, yes.
Really?
Yeah, if you have a federal student loan and they are doing involuntary collections, Social Security garnishment is a possibility. We haven't seen that since before the pandemic, but that is the rule. And depending on, who's in the White House and running the Department of Education, that is a potential possibility. But, that's just another reason to stay on top of it.
You really got to be aware.
Yeah.
Yeah. Yeah.
And it's harder because, especially if you're in the generation that's like caught in between, like your kids are getting ready for school, your parents are either on the brink of retiring or they've just retired, you may be dealing with student loans on both sides and your own.
Yeah.
But there are also some opportunities there. Like, we talk about, we haven't gotten the chance to talk about it, but 529 plans.
Yeah.
I think that's a great thing for grandparents to do.
Oh, I love it.
Because for parents, it's really tricky.
It's tough.
You've got a newborn at home.
Yeah.
You've got 18 years to start, and that is the toughest 18 years to be setting money aside.
Yep.
But for the grandparents, we talk about the people at the end of the journey.
Yeah.
Like, you can take steps now to make sure that the student loan cycle is no longer a thing that impacts your family the way it has in the past.
If you have the ability to put
if you
10,
have
20 grand down, I know it's kind of a big number. If you could put 30 grand down, it's insane.
Whatever you can do makes a huge difference.
Yeah. And you put it in maybe you've got multiple grandkids, but you can change the beneficiary. You can at least start to build this entity that can facilitate and help pay for higher education.
And you can change that cycle because student debt is a generational thing.
Yeah.
Because if you've got student loans, it's really hard to save for your kids' education, and then they'll need student loans, and it just...
Yeah, you're right. You can be one generation away from solving that problem. Yeah, that's a big one. I'm glad you brought that up. Anything else that I didn't ask, we didn't cover?
I don't think so.
That's good.
I don't think so. Your questions are very comprehensive. I really appreciate that.
All right. I learned a lot.
Good.
It's fantastic. I got one more for you then.
All right. Lay it on me.
All right. The name of this podcast is...
Wealth is a choice. Boom.
And wealth means a lot of different things to different people. For some, it's money. For some, it's abundance of something. It could be family and health and athleticism and community. For whatever wealth means to you, do you see wealth as a choice?
I mean, that's a heavy question, and that's not a student loan question.
No.
So now we're far outside of where I'm comfortable opining. But I would lean towards usually.
Okay.
I think it's very important to define wealth in a healthy way.
Okay.
If you define wealth as a bank account or as possessions, I think you're setting yourself up to be unhappy and unwealthy.
Okay.
If you define it in a meaningful way to you, be it relationships, be it experiences, be it whatever fulfillment you seek, then you do have that opportunity. I don't want to unequivocally say yes because, there are circumstances beyond our control. And sometimes things happen that, I see it a lot in student loans where somebody does everything right and it's still they're just put in an awful scenario, and it's sad when that happens. So I don't want to unequivocally say yes, because lots of people have lots of challenges, and I don't want to sit here and say, yeah, just redefine wealth the right way. But I also think there's a really healthy way of looking at it. And, we talk about so much math today, and so much of, saving money on interest and this and that. And that's responsible, but wealth comes, in my opinion, from other things.
Yeah.
And if you're smart about your finances, you leave more space in your life for those other things that where wealth really comes from.
Yeah. I like that answer, Michael. And today you've talked a lot about helping people understand where they can gain control and how to get in some level of control, then how to maintain some type of control. But also, I'm going to say too, like you took this job in the state of Michigan now, and so somebody in government, I really love to hear that you recognize there's a lot of things that happen to a lot of people, and people have to have that awareness that it's not all the same clean slate.
Yeah.
And you can do everything right and things happen, and people need to be aware of that and look out for those that have those things happen.
Yeah.
So I'm glad you've got that mindset and that you're here in the state of Michigan and you're able to help look out for all the different variables of the types of people that are out there. And
I appreciate that. I think a lot of people lose track of, we talk about personal finance a lot.
Yeah.
And so much of the focus is on that second word, finance.
Yeah.
But it's very personal.
It
and
is.
There are so many unique circumstances that, you don't know anybody else's life, their circumstances, their hardships. And I think it's dangerous to make assumptions.
Yep. Fantastic. Thank you.
Thank you.
Man, what a pleasure to meet you. I appreciate the time.
Wonderful meeting you too.
Very good. Thanks for watching, everybody. Awesome.